How's it going, everybody? PK Investing here. A bit of time has passed since I released my last Tesla update video, and a lot has happened since then. But before we dive in, if you missed my previous Tesla update video, I'll have it linked down below along with my Tesla update playlist. Alright, with that out of the way, let's get into it. Long live the king is a saying us Tesla shareholders might be hearing more often now. Back in March, in a filing with the SEC, Elon gave himself the title of Technoking. In addition, Zach Kirkhorn, Tesla CFO, was given the title Master of Coin. Both of these titles were in addition to their normal titles of CEO and CFO respectively. Every Game of Thrones reference leaves a sour taste in my mouth now, thanks to the abysmal crime against humanity that was the final season. But I'm glad Elon is having a little fun with everything. Now let's move on to the main event, and that's Coinbase. Coinbase is a platform that lets you store, buy, and sell cryptocurrency. Completely ignoring fundamentals and the platform itself, Coinbase has very strong name recognition, and that's more than enough to propel it to the top of the charts. What's interesting about Coinbase going public is that the company decided not to do a traditional IPO like most companies. Instead, they opted for a direct offering. I know some of those terms might be foreign to new investors, so let's take a look at them to understand what they mean. So first is the IPO, the initial public offering. When a company decides to IPO, it means they want to go public, meaning they want to have their shares publicly traded on the open market. The company then creates new shares of itself and hires an underwriter to take care of things. The end result of an IPO is that selling these new shares to the public results in an influx of capital for the company. However, a large chunk of that cash goes towards the underwriter, so the company that's IPOing won't see every dollar that's been raised. Now, this word underwriter might be an unfamiliar term for some. An underwriter would be a group that basically takes on the risk and handles things in return for a commission or a fee. While researching for this video, I came across the origin of the term underwriter. According to Investopedia, way back when ship owners were first starting to seek marine insurance, they would draft a document that basically laid out all the information for the ship, like the cargo and the crew. There would then be these businessmen that would be willing to assume some of the risk in return for either a cut of the profits or a certain fee. These businessmen would sign their names at the bottom of the document. They would write their names under the writing of the contract. Underwriters. There are many terms nowadays, and not just in the financial world, that might seem like they're weirdly named. So it's always interesting to look back and see where those terms came from. Now, the other option is a DPO, or a direct public offering, or just simply a direct listing. In this scenario, no new shares are created. Existing shares are sold to the public by investors and employees that already held shares. Of course, there are advantages and disadvantages of direct listings over IPOs. Obviously, the main advantage of a direct listing is that there are no middlemen. There is no underwriter to take a cut or charge a fee. The company just starts trading publicly, and that's it. The disadvantages are that since there's no underwriter, there's no one to assume risk other than the company itself. and this can be problematic if certain issues arise. You might be asking yourself, what does Coinbase going public have to do with Tesla and Elon? Well, like I mentioned before, Coinbase has very strong name recognition. Just by going public, more people are being made aware of the existence of cryptocurrency, and demand for crypto is increasing. Like I mentioned in a previous video, Tesla has invested $1.5 billion into Bitcoin and will eventually accept Bitcoin as payment if they haven't started already. At the time of this recording, one Bitcoin is worth over $62,000, and that number will only increase as more people get hyped. And Bitcoin isn't the only thing that's going up. Many other cryptocurrencies have been riding the coattails of Coinbase's direct listing. Dogecoin is a literal meme coin, and it's up almost 50% at the time of this recording, for no reason other than it's a cryptocurrency. Are we in a crypto bubble? Inversely, is this the beginning of the crypto era? Let me know what you think in the comment section down below. Alright, let's change gears and get into the Tesla challenge. I usually buy $1 of Tesla on average every day, and I log my position in a table. I do this because I really like Tesla and Elon, but I also do it because I want to document the long-term effects of dollar cost averaging. So let's take a look at my position in Tesla and see how things are going. The table might look a little different than in previous videos, and that's because I've consolidated my tiny growth portfolio into a single spreadsheet. But for the purposes of this video, I've isolated Tesla. So it looks like I'm up to 0.602 shares with a total cost basis of $300. My overall return is $140, which is around a net gain of 46%. Thanks for watching until the end. If you learned something new or enjoyed the video, consider leaving a like. And if you haven't already, subscribe and hit that bell notification. Take care, and I'll speak with you again real soon. I am not a financial advisor. Investing always involves risk. This video was created for entertainment purposes only.